Hello everybody, welcome to this Chronicle. Today we're Thursday, January 15, 2015. My name is Christian Charlo. Today folks, I want to make a follow-up on the last Market Chronicle where we've talked about a bullish movement that we had in the utilities and also in the maritime and transportation sector for day trading. Well, today folks, that movement that we had last week was able to continue slightly in the utility sector because what we actually have TBT, which actually is tracks the bond yields. Well, the bond yields are staying at an all-time low. So this is actually something that's positive for the utilities because when interest rates are going down, utilities tend to do fairly well. Actually, in January 8th, when I've talked to you about this bullish movement that we had in the utility sector, it was because we're actually reaching a low on the bond yields. Concerning this S&P 500 situation, well, the rally that we had that started on January 8th, it has not been able to continue. Right now, the S&P 500 is heading towards its low of December 16. However, most of the bullish positions I've shown you in the utility sector are able to resist. For instance, that stock here, XEL, that's actually the stock that we recommended on marketgurus.tv as a buy. Marketgurus.tv, you can have access to that for free for 10 days just by clicking at the link below for marketgurus.tv. We still have that choice, that stock in our analyst shares portfolio, and we're continuing to hold on to it because it maintains its upward trend. Same thing to for Wisconsin Energy. It was breaking out on January 8th. It's still a hold for a stock like that because it's maintaining its increase. Same thing too as well for Integris Energy. But Dominion Resources, it was a stock that should be watching an eventual breakout. So far, the stock has not been able to start any new breakout. It's still neutral, only higher than 78.46. And Aqua America, only higher than 27 bucks. That's going to be a go for a stock like Aqua America. In the maritime and transportation sector, though, it was mostly for day trading. But right now, what we're seeing is that a lot of stocks actually that were active last week are making a neutral range right now. For instance, TK Tankers having a correction, but still staying within a sideways formation there. Same thing for Navios Maritime. It did break out here. So far, it's not in a situation where you should get out or sell that stock because it's just forming a new neutral formation after the breakout of January 8th. KNIGHTSBRIDGE Tankers didn't really pursue its rally since it broke out on January 8th. The stock is just making a neutral range, so only higher than 6 bucks that we're going to have a new opportunity to get in. And Navios Maritime, the stock stayed totally flat, actually testing its support after the breakout that it did on January 8th. So we're back to the same neutral range on Navios Maritime, and other stocks didn't actually perform. They're just staying within this sideways formation, and Capital Product Partners and also in Ship Finance, we're just testing dangerously the support. So it's still a hold on your positions in the utility sector and as well as your positions in the maritime and transportation sector, where we're forming in the maritime and transportation sector a lot of sideways formation on the stocks I've shown you in the January 8th Chronicle. Now today, what I want to focus my attention on is on gold, because today we had a major announcement, a surprise announcement from the Swiss bank that we've talked about and we detailed on marketgurus.tv. And this announcement is that the Swiss banks, they stopped to actually intervene in the foreign exchange market, especially because euro and the Swiss franc actually had a ratio that the Swiss bank wanted to always respect. Because the euro has dropped so much, they decided to stop intervening to maintain that ratio. And we actually have seen also a decrease in their deposit rate, which means that banks that are putting their money on the Swiss central banks are not making any money because the deposit rate is now at minus 0.75%. So it's a way to actually make those banks to lend more instead of putting money in the Swiss central bank. We actually had a surge on gold, which is actually pursuing its increase. So definitely it's all bullish on gold right now after this announcement. We actually have the resuming of the bullish cycle of the gold sector. For instance, on marketgurus.tv, we did recommend that stock here, KIRKLAND Gold, as a buy. Today, with the surge in gold, that stock was a clear profit-taking opportunity. And we still believe that those of you who bought some gold stocks, though, you should actually be in a position where you should actually take some profit on those positions, especially with today's surge on gold and in the gold sector. Or you can go in with some bullish ETF. There's NUGT or there's HGU. Both of those bullish ETF are actually great opportunities to trade that movement for swing trading and for day trading as well. So HGU and NUGT, as long as they maintain their upward trend, I think it's still an ETF you should continue to hold on to. However, it's already surging about 19%, which makes the loss potential definitely great, because it's only below 15 bucks that you're gonna have to get out of it, and an HGU it's only below 6 bucks. So there's definitely a lot of loss potential if you're buying those stocks today. But it's the gold sector, and this sector was the most active today, when we were able to take some profit on that stock that we recommended on marketgurus.tv, that you can have access for free for 10 days just by clicking at the link below. So this was Christian Charlo for your market report. See you next week on marketgurus.tv.